Hi everyone, today we're going to do an update on B&M, and as you can probably tell by the title of this video, I have sold all my shares in B&M. I saw the profit warning come out yesterday and I thought this is awful. This is a terrible update, and I posted on X and this can sum it up basically my overall thoughts yesterday about that profit warning, that unscheduled profit warning. I'll tell you right now, that was the worst update I've seen B&M do since being a shareholder. Feel like I got away big time today with that stock only being down 7%, and that's the truth. I do not know how the stock was not down more than that yesterday. That was a miracle. The update that came out from B&M was awful. I've been a shareholder probably for over a year now, maybe a year and a half maybe, and I've gone through my fair share of updates from B&M being poor. I've seen profit warnings from them guys and they're being awful. But yesterday was the biggest shock. The fact that there was a profit warning and the size of the profit warning was terrible. And as well as that, the information that was also given from the new CEO, I thought was very, very disappointing. I was so disappointed. I looked at that and I went, you know what? I'm selling my shares here. This is nowhere near good enough from B&M. And there's only so long that I can sit there and sit on my hands and go, okay, eventually they're going to start moving up in the right direction before I have to walk away from the business. And I was talking about AMD yesterday, which is obviously total in the opposite direction, which is a stock that's performed absolutely amazing for us. And with AMD, I was saying to you guys with AMD in yesterday's video, like, you know, when the stock is going down, but yet the financials are improving, that's where you're like, okay, this is absolutely amazing. I'm going to continue to buy the stock. It's giving me cheaper, but yet the financials just keep improving. That's not the case with B&M. You know, I've sat on B&M for like the last year and a half now, and the trend just getting worse and worse. There's another profit warning, followed by yesterday's mega profit warning. We have to go, they're not improving. I have to walk away from here. This is not good enough from B&M. The trend is not going in the right direction. And there was a big thing that when I was selling B&M yesterday, a big thing that came into my head from Warren Buffett. And Warren Buffett says, rule number one of being in the stock market, don't lose money. Preserve, keep that capital. Preserve that capital that you have. That is job number one. And if I'm in a position and I see the deterioration of the company, why am I sitting there? Why am I holding the business? If the fundamentals aren't getting better or even maintaining, why own it? Because what's going to happen is my capital is going to be worth less. The business I own is going to be worth less. And my opinion right now is I'm looking at the numbers from B&M, and in my opinion, the company is going to be worth, less than what it is right now. And the fact that that update put B&M in a position where they delivered the worst financials they've done for the last 3 years, and yet the share price did not touch 52-week close. Like, the 52-week close of B&M is £2. In my opinion right now, B&M should have fallen below £2 in that update yesterday, and it didn't. And I was like, I think I've got away with one here. The trend's not moving in the right directions. The financials not getting better. Why stay here? There's plenty of opportunities in the market. There's plenty of opportunities where I'm seeing other stocks where the share price is decreasing, but the fundamentals are getting better. And that's what I need to own. I need to find the great value in great companies that are beaten up but yet the financials are improving. And those are the ones that will get me the returns, like the AMD situation. Not if the fundamentals are decreasing. And that's the case with B&M. So just to show you that trend that is the example here. So if you look at 2023, the revenue 4.9 billion, 5.4 billion, 5.5 billion, 5.8 billion. So from a revenue point of view, everything looks fine with B&M. This is where your issue is. Looking at profit. So went 348, that's okay. 367, okay. A little bit of an increase there. Now to 319, and now if you look at this year's numbers, 320, well, they've done the profit warning. So when these numbers get updated, the profit's going to be even less than that. So you're going to end up a point of view where the profit is decreasing while the revenue is going up, which is never a situation you want to be in. Like, revenue growth isn't even just maintaining profitability, it's decreasing profitability. And all the times that you look and go, oh, well, it's 7 forward times earnings. Well, actually, if the profit keeps decreasing on the way that it is going, all of a sudden you're at 8 times earnings right now. Well, all of a sudden, if the profit's going down, you're actually at 9 times earnings. And then you're like, well, are you willing to pay 9 times earnings for a company where the profit is decreasing, I don't know, 10% every year? And then all of a sudden you're in a dividend trap. because then you start having questions around the dividend. Not saying that B&M dividend is going to get cancelled anytime soon, but then that's when you snowball into a bit of a worse situation. And then obviously with someone like B&M, the balance sheet issues they have as well, then the debt starts catching up with them a little bit. It's just not a great place to be in. Anyway, let's get on to some of these, what happened with B&M yesterday. So first of all, let's start with the main issue. Let's start with the core issue with the B&M numbers yesterday. So they expected EBITDA to be approximately, we have to go with EBITDA, it's the only number that they actually gave us. They expected EBITDA to be at 198 million, which is from the last year's numbers of 274 million. Now this is an issue. They already had easy comps, B&M, from last year. Right, they already did a profit warning last year. They had easy comps. And the fact that they are now 30% below the EBITDA of last year, massive. That's, how are you that far behind? Because revenue stayed about the same and you're decreasing. That's margin absolute collapse, is that. 30% down. Ridiculous. Absolutely ridiculous. And now they want to hit full year guide. When they're already decreasing that much, which I think is full year guide's only for a 10% drop. Yeah, ridiculous. And you look at the full year guide that they had have given for the year, 510 million to 560 million. That's around about a 20% decrease from last year's numbers. That's I don't know how the stock only went down as 6% as it finished at the close. I thought that was lucky. Like, I know it's EBITDA numbers, but from what you have right here and the profit warning, I thought the stock was going to get whacked 20%. I thought if the profit is even lower than where it was 2 years ago, I would expect this to break the £2. I just couldn't believe that's happening, and the fact that this has happened now is as well is just terrible. The other thing as well is, like, we've had the new CEO come in on B&M. And what he's been doing is he's been buying a lot of shares up. Now, there's a lot of talk about why he's buying these shares. A few people say it's part of he's got to buy them, which isn't true. He doesn't have to buy these shares, although a few people have been saying it. He can if he wants. And he does then have more options about what he does with his bonus shares that he does get. But it's not necessary. And he's also, if that's what he's going for, he's got a 12-month period to build up these shares. So the fact he decided to buy these shares right now, for me, was it like a signal to the market, like, we're in the bottom. And the fact that he bought all these shares and then come out with this major profit warning, that's worrying to me. Like, that's your Easter egg to the market. Like, I'm buying shares, so the bottom's in. And then you bring out a profit warning like this. My other issue is that we came off the Q1 update. If I go back to the Q1 update, and things sounded a lot more positive there. When you looked at the Q1 update that came out, where's the Q1 update gone? On here, so that's H1, directors. So they came out, we've got back to positive revenue growth here. Things are sounding positive. Insider buys are coming on. It all sounded positive. Well, the problem is if this is the kitchen sink being thrown in from the CEO, like, okay, let's just knock back the expectations a little bit. This is when you do a kitchen sink update. Is your first update to the market. You don't come in as the CEO and bring out positive like-for-like, things are going up in the right direction, and then you come out with an update in a few weeks' time after buying loads of shares and then to absolute kitchen sink the guidance. That's not how you work as a CEO when you come in. You kitchen sink it as soon as you come in and then you build up. Absolute rookie errors, which makes me really nervous around the CEO in here and capital management. The big thing that we're talking about is this back to B&M basics, which is one of the worst names I've ever heard from a turnaround plan. Anyway, so they said that they focused on sustainable like-for-like. They had like-for-like growth, and then they have had this horrible second quarter. Have I got this? Yeah, it's my next slide. Okay, and then they've come out with this horrible second quarter. It's like it should be called recovery from the balls up that we had in the second quarter. That's what they needed to call it. And the thing is, they should have done well. Like this Q2 period should have been a good time for them. Retail sales were up. People were out shopping. They've got the garden centres. Look at B&Q's numbers. They should have been, doing amazing with all this garden furniture and promoting all these garden products. And they flopped. They flopped. They should have done better in this time period. Retail sales were a lot better than what was expected, and they should have done really well from it. And look at this here. So we saw them bring in positive like for like, and then sales were weak in May. They did see a bit of a move in the right direction, but June was still poor. So I'm also a little bit frustrated about. None of the analysts today also asked, what was going on with the share purchases. Was that just because you think the stock's going to go up? Is it part of your payment package? But also, why did they not ask for any more detail about, okay, has the trend continued into July, August, September? They had all the data for them 3 months. And the thing is that from what I can tell is if they're cutting the guidance this much, I believe those few months have been pretty poor. But they had since this management team has come in, they had a good June, January, February, March, April, and then obviously the May and June. How has it collapsed so much? Like when they last left it to us is like for like sales going in the right direction. We're trying new things. They're having positive impacts, and then we've had this horrible May and June. Like I don't know how it's been this poor because the retail sale environment has been pretty decent or better than they expected. They told us that things they were putting in place were having positive effects, and then it's been a car crash. So clearly when they told us last time the things they were putting in are having positive effects, they clearly haven't worked. So how can I trust management team to deliver, this back to basics B&M rebranding when everything they've told us so far, with like the kitchen sink in the guidance at the wrong time, the chairs being bought at the same time, the turnaround new features having effects and clearly they've totally collapsed. The first couple of months they've had under the belt have been absolutely terrible. How can I trust management to turn this around? I just can't. I was listening to the conference call and, obviously like if revenue growth is maintained about the same is what they said. So if we just go back onto the revenue growth here. So if you look here, right, revenue growth of 4% in H1. So if you're doing this amount of an EBITDA downgrade, your margins have collapsed basically, which I don't understand how the margins have collapsed that much in this time frame. But they come out and say like they're also having to cut prices on products. Imagine the gross margins collapsing after all this time. You're not able to get like-for-like growth up, which you should be able to do in this inflationary environment. And now they're saying that they're also going to cut some more prices. Like one of the best things about B&M is that they had decent profit margins, gross margins, and now they seem to be collapsing. They're on about this rebooting this managers special promotions as a way. I don't know if any of you guys, I was listening to the B&M webcast this morning, and I was actually in B&M. I thought I'm going to see like some of these things they say they're implementing, and I went to B&M and said this manager, it's a lot of BS. Like it's literally someone comes on the microphone that doesn't want to do it. And the least enthusiastic thing of like, we've got a promotion today, you can buy some bread for 75p. If that's your driver to get sales up, it's absolutely ridiculous. Like if you want a promotion, you need to have it like at the front of the store, some nice fancy display and an actual interesting product that isn't like bread for 75p. And I don't know, like some special pumpkins for Halloween or something, that these decorations that are on sale, or this early launch Christmas with, I don't know, some sort of special trees that are being launched or something. Something exciting, like not shouting on the, the telecom and shouting about bread for 75p. Like, come on, give me a break. That load of rubbish to me. Once again, I just makes me nervous when this is the management team that we have in place now. I've already stuck through one terrible management team. I'm not sticking around for another one. Refocus on our ranges. This was mind blowing to me. So they talks about they wanted to reduce line count and accelerate the clearance of discounted ranges, particularly in FMCG, home accessories and toy range, following a material increase in SKUs. Sounded like to me as well they're quite big on focusing on the fast moving goods part of it. This is little things like people don't go to like B&M for pork chops. Like that's not what people go for. People go to B&M mostly for like some of the food items, some of the cleaning items in particular, but also like the seasonal ranges. Like people go for like the Christmas products and the Halloween products and autumn decorations and Easter decorations. And the reason why B&M does so well is when things go viral and like people talking about it, people talking about like like copycats and dupe products, where people talk about, oh, B&M have this like this dupe of like the Uggs or these hair curlers, and that's what people talk about, and that's what they put on TikTok. And people go on TikTok and they post about like the Halloween, the autumn decorations that they've got in, and the Christmas decorations that they've got in. That's the big thing that people go to B&M for, and that's what you need to focus on. And I was listening to like management team said that's what we want to make more of a feature of, is these like seasonal items and make it more exciting. And I went in and they said like they moved all the Halloween stuff or the autumn stuff into the front of the store to like get people's attention. Now the one that I went in, all the autumn stuff was on the left hand side, where you walk down and you don't even look at the left hand side, you look to the right because the store's to the right side, and you don't look at it. So people are missing it. And then the worst thing is that the store I went in, they had half the autumn stuff at the entrance like they said they were going to do, but there wasn't enough room for it. So they left the other half of the autumn stuff at the back of the store, and then they had all the Christmas stuff at the other back of the store. So you had half the seasonal stuff at the front, some at the back, some of the other stuff at the back, and it was all over the place. There was just so much jumble. Where they previously had the autumn stuff, the staff that were there had left all the autumn price tags on the shelf and then replaced it with I can't even like cushions or something. So the store looked an absolute mess, where there was these Halloween and autumn things on all the shelves, but yet there were just normal cushions there. They had this autumn stuff that was in on the left, but people weren't even looking at it. And then they had the other half of the stuff at the other. It was a mess. It was an absolute mess. Worst organisation I've ever seen. And so they want to create a bit more of an experience when they come in the store. That's not creating an experience. It's causing a nightmare. Like, if you want to, I understand like building something up to get people excited and at the door. Like I know like the Range do something similar quite often, where they have like all the seasonal stuff at the entrance, and that drags people in. Like, oh, look at that. And if that's what I want to go for, that's absolutely fine. But you need to do it right. Like, it just seemed an absolute mess to me when I went into the store, to be honest with you. Now, they talked about restoring product on shelf availability. They said like some of the best sellers are selling out and they're not getting them back on the shelves, which, okay, fair enough. But if this was the case, like, wasn't this aware like the first few weeks? And then why didn't you bring that up in the first few weeks rather than bring that out in this update? Like, shouldn't that have been kitchen sinked early on? And they're saying all these things like, stock management was done on like an Excel document, which is pretty terrible for a company like on B&M side. But why not do that in the first few weeks? Why did you not just kitchen sink it on the first few weeks and then build up from there? Why were you not clearer? I don't understand why they've waited today and done this profit warning for this all to happen. It's just a mess. It's an absolute mess, to be honest with you. I've got to say that the B&M France was actually pretty good. The growth was good. Like-for-like were good. Got no problems with B&M there. So they said about gross margins, said it's communicating the trading update in Q1 gross margins were impacted by the average selling price of deflation, which is true, but they said they were going to get better. This update to me today says it isn't going to get better. And it seems a lot worse than what they were suggesting. And it should be getting better. Like, you look at, they were already on easy comps from last year. And you look from last year and like the shipping container index with like B&M shipping things across from China. Like, you look from a year ago, the average the shipping container across from China is 3,700. It's now dropped to like 1,600. Like, this should be a massive tailwind for you, where you should be getting better gross margins in, and you'll have headline sight into that. Like, they said that they're going to see, it start improving at the back end of the year. This should already be in. This is like basics, and I know some of this might come down to previous management team, but the new management team should be on here saying like, look, yeah, the old management team have ordered stocking in the wrong direction at the wrong time, paying bad prices for it. Just let you know, we've already reduced our shipping margins, shipping costs, and that's going to have such an impact in the next 12 months. That should all have been communicated in today's update, and it wasn't, which wasn't great. They said UK like-for-like percentage growth rates of low single digits to negative to low single digit positive levels. We'll see. I mean, that's a massive range, but for me, they shouldn't be anywhere near, negative growth. I think the comps that they have here, that should be a lot higher than where they're at the moment. They also came out with this. They said the back to B&M Basics account will take 12 to 18 months to take effect. 12 to 18 months. Like, you're already, like, the comps from last year, it should be easy to just maintain. Like, they should be able to maintain them and then see, growth going forward. The fact that 12 to 18 months, you've come out with this update today, which I think is an absolute mess. And then you're telling us 12 to 18 months before we start seeing the effects taking place. Well, I'll tell you what, guys. I said, I'm hopping out of it. I ain't waiting around that long to see proof of that turning around. So I'm going to move away. So yeah, look to the stock. I thought it was an awful update. The worst one that I've seen since I've been a shareholder. And the new management team, I think they've had an absolute stinker here. The fact that the stock basically recovered it all, I was like, wow, okay. That was mental. The debt went up as well. Capital allocation, I thought, wasn't clear enough. They basically said we're going to get rid of the special dividend and we're going to go to share buybacks, which I am a fan of. And then they said we'll give more clarity to the end of the year. Like, why? Why not just give clarity now? Like, why do we have to wait until the end of the year? It's not hard. Like, decide what are your priorities? Are you going to pay debt down? You'll have a good idea about your capital allocation. If you hit a certain profit, you can say, like, we're going to commence a share buyback at the end of the year. Be clear about it. The share buyback will depend on X amount. Be clear about it. This is the problem that I've seen with the management team is it's just so like, that's what we're going to try and do. But what you're going to do, be more clear on what you're actually going to do here. So yeah, anyway, there was so much I didn't like here. I've been through this stock through, other profit warnings. This was the worst profit warning that I've had since I've been a shareholder. It was an absolute deterioration on those gross margins and that profitability level where I was like, you already had tough comps and you're doing them. That's concerning. As I say, when I buy these stocks and you do buy these falling knives, you want to buy falling knives, but you want to see the fundamentals getting better, right? You're not having that with B&M. They're getting worse, and it's accelerating that it's getting worse, which is the issue as well. That's major worrying. I've sat through, a bad management team previously. The first update here isn't great, which is making me nervous. Can I trust them to deliver this turnaround? And looking at what they're saying, like, I think I maybe can come back in, 12 months and maybe reassess it potentially. So yeah, I sold out. I looked and thought, if this stock was down 20% today, would I buy? And my answer was no. I said after that update, I would not have the confidence to buy. So I thought, well, why am I holding? If you've not got the confidence to buy after a 20% drop, why hold it? And I looked at my average, and with the dividends included, annoyingly, I was down negative 1% with the dividends included. I was like, oh, here's a negative 1%. If we break even, it would sound a lot better. But I was down negative 1%, and to be fair, with the profit that I've trimmed on it when it previously rallied up, we did lock in some profit, and I did have a pretty good average on it. I actually made net profit on B&M. Obviously, it's performed nowhere near what I intended it to, but it's not a terrible position. And the fact that even just right now, I was at like a negative 1% return on the stock, and after this update, which financially has had a massive deterioration, I looked in and thought, this is the first time in the last like 12, 18 months I've owned B&M where I'd look and I go, I do not have the confidence to buy. Why hold my shares? If I hold my shares here, I'm just hoping it gets better. That's it. Like all the other reasons I've told you previously why I buy in B&M, I've kind of tried to back it up with things. If for me to buy B&M now, the only reason I'd be buying it is because I'd be hoping for it to go up. Like that report there, I see nothing positive apart from probably B&M France that would make me go, I'm buying now. Like the management team, what I thought they were giving the signs out where we saw Q1 like for like improving. it's gone. And I think they should have done better in Q2. Management team trying to say like, oh, buying shares, be like, we're doing all right here, and it turned out to be a load of absolute rubbish. The gross margins, saying that gross margins are not great, but they improved in the year. That says to me the gross margins are absolutely shot at the moment. This turnaround plan, why not do this earlier? If you knew this was the case, why not do this earlier? I don't understand. Now you bring the kitchen sink out after being in there for like 6 months. You do that in like the first 2 months. You don't do it 6 months in, and especially after you've been buying shares. The ideas that they have, I don't like the ideas. I think the focus that B&M should be on is massively different to what they are moving in. Like for me, I would be moving into more like the trends, the TikToks, the higher basket items a little bit, them sort of things. People go to B&M because they want to get a good product, but for a really good price. That's what they're going for at the end of the day. And these some fast moving goods, which I still think like are still a key part of the business. But also there's that element as well. People go there because they've seen something that gets their attention. But while they're there, they pick up some other things. That's what B&M normally is. Yeah, I just thought it was very poor. Very, very poor. And I thought I wouldn't be a buyer at these levels. If it went 20% lower, I wouldn't be a buyer at these levels. The things that I saw being in the positives have gone. I look at my average. I can walk away here basically taking break even. I know it was like a negative 1% loss. Why not move away? And you know what? If they start turning around, fair enough. Well done. I got it wrong. And maybe as well, maybe if the signs do start coming that they're turning around, maybe I'll buy back in. But I'd rather, even if I miss like a 10% jump from here, because maybe they do start turning around, I'd rather be more able to sleep and trust my investments than just hope for the best. Like if you get into a position where you hope for the best, you're gambling basically. I don't want to be in that position. So yeah, that's where we're at with B&M anyway. So yeah, hope you enjoyed the video, guys. Thanks for watching, and I'll see you in a bit.